Hello everyone. Welcome back to Unday Radar Talks. Starbucks CEO Laxman Narasimhan said this is a challenging environment. For Starbucks, that's true. In terms of second quarter earnings, the company missed expectations across the board. Revenue, earnings, and same-store sales growth all fell short of expectations as customers reduced the frequency of visits and order sizes. Starbucks reported second quarter adjusted earnings per share of 68 cents, down 8% year-over-year, compared with Wall Street expectations of 80 cents. Revenue was $8.56 billion, down 2% year-over-year, compared with Wall Street expectations of $9.13 billion. The company expects global revenue growth in 2024 to be in the low single digits, down from the previous range of 7% to 10%. It's a shocking correction that illustrates why some investors are opting out. We see on the daily chart that the stock is currently showing a huge gap. At Wednesday's close, Starbucks stock fell 15.88%, with 66 million shares traded, compared with 14 million shares traded the day before. We can see from the 10-minute chart that trading volume on Wednesday was mainly concentrated at both ends of the market. Bulls strongly pushed up stocks in late trading, although the market index crashed wildly at the last minute yesterday. This counter-trend rise is a good sign. Affected by the overall market sentiment, shares of Starbucks peers also performed poorly on Wednesday. McDonald's gained 0.51%. Yum! Brands fell 4.19%. Domino's Pizza fell 2.43%. Restaurants, Starbucks sector, fell 3.64%. It was the worst performing sector in the market yesterday. It appears that a macro headwind is widespread for the industry. Consumers are feeling the pinch from high inflation. At the same time, conflicts in the Middle East and weak consumption in China also affected the quarterly results of these restaurant industry giants. Data show that on April 29th, Starbucks stock capital had a net inflow of $22 million. On April 30th, there was a net inflow of $13 million, and Starbucks stock price rose slightly by 0.18%. It seems some investors already knew the stock was going to drop significantly the next day. On May 1st, the stock had a net capital inflow of $66 million. However, these capital may be actively entering the market to buy the bottom rather than escaping capital. A sharp drop in the stock price creates a lot of short selling, but may also create an opportunity for a rebound. 23 analysts have rated Starbucks stock in the past 3 months and have given it a 12-month price target. Among them, buy ratings accounted for 34.78%, and hold ratings accounted for 65.22%. The stock's highest price target is $104 and its lowest price target is $80. The average price target is $91. Wall Street's overall sentiment on the stock remains positive. Stocks had a volatile day as investors reacted to the Federal Reserve's decision to keep interest rates on hold. In a closely watched press conference, Federal Reserve Chairman Jerome Powell largely ruled out the possibility of the Fed raising interest rates next. Interest rates remained in a range of 5.25% to 5.5%. Federal Reserve Chairman Jerome Powell said that regardless of the U.S. presidential election this year, the Federal Reserve will continue to make interest rate decisions independently, otherwise any approach may lead to negative consequences. What's interesting is that after the news was announced in the afternoon, the market index rose sharply and then pulled back sharply in late trading. The S&P 500 closed down 0.34%, while Dow Jones closed up 0.23%. This brings a lot of uncertainty to the direction of the market on Thursday. At the same time, everyone will also pay attention to economic data on Thursday, including weekly initial jobless claims, first quarter worker productivity and unit labor costs, as well as March trade deficit and factory orders data. For Starbucks stock, The price has fallen back to where it was in July 2022. This is the starting point for a bull market in this stock, and there is a lot of trading volume here. It should not fall below this level in the short term. This is a strong support level. The stock's trend in late trading on Wednesday was inconsistent with that of the broader market index, and bulls adopted a strategy to buck the trend and raise the stock price. This brought positive sentiment to its share price rebound the next day. Even if there is a short-term decline, I think it may not fall below $68. So the current price can be considered support level 1, then $68 is support level 2. Views on the long-term trend of the stock. A very disappointing quarterly earnings report from SBUX means its business will likely take some time to recover. Inflationary pressures will take quite some time to subside. The negative impact of the epidemic has caused consumers to become increasingly cautious. This is definitely not easy for SBUX, but SBUX must be a global brand with healthy finances and no close competitors, so it deserves long-term attention. That's it. This is my analysis. If you have different ideas, please leave a message below. Thank you for watching. If you like my video, please give a thumbs up and click the subscribe button. See you in the next video.